And fears of a recession sparked the downturn over what's known as the inverted yield curve. Don Dahler reports from the New York Stock Exchange.
The closing bell on Wall Street was a sour note for investors Wednesday, as a key indicator in the bond market signaled a recession could be on its way. CBS News business analyst Jill Schlesinger.
What investors are telling us is that they're quite uncertain about the future. They're worried about what stocks are going to do in the future. They're worried about what the economy is going to do in the future.
For the first time in more than a decade, the yield for the 10-year bond dipped below the yield for the 2-year bond. That means investors are more willing to bet on the short-term economy than the outlook for the long term.
So an inverted yield curve can be a signal that things will slow down in the future and has often been a sign of recession.
The Fed moved, in my opinion, far too early and far too severely.
President Trump has been quick to blame the Federal Reserve's actions on interest rates, tweeting crazy inverted yield curve. We should easily be reaping big rewards and gains, but the Fed is holding us back. But analysts point to other factors as well, including the U.S. trade war with China and economic slowdowns in Germany, France, and the UK.
Now the question is, how quickly will the Federal Reserve act to stave off further slowdowns, or when the president and the administration will sit down with China and remove this cloud of uncertainty?